Should I buy stocks because of their high dividend yield? Why do people try to invest in stocks with high dividend yields?
So I think it's been a common strategy for a long time, Maddie. And a big part of it is you want money in your pocket, right? So if you buy a stock and it pays you a quarterly dividend, it's a nice, it feels good, right? Like you're getting something back. You don't have to wait for the stock to appreciate. So it's been a common strategy for a really long time. And actually, until the middle of the last century, stocks paid higher dividends than bonds because they were seen as riskier. So companies had to pay high dividend yields to entice investors to invest in them.
What are potential risks of investing in stocks with high dividend yields?
Well, there are a lot. The company could be paying a high dividend yield because nobody's interested in buying the stock, and so they send a lot of cash out to dividends to get people to buy it, right? And maybe that's not sustainable. Or maybe the dividend yield is high because the stock has fallen recently. So if you buy $100 stock and it has a $4 dividend yield and it yields 4%, that's a high yield. Well, what if it was a $2 dividend yield and the stock fell from 100 to 50, and that's what makes it 4%, right? So if the stock lost half of its value, it doesn't necessarily mean a good thing for the dividend yield.
How can I assess whether a high dividend yield is sustainable or a result of a declining stock price?
Sure, you go into like Yahoo Finance or Google Finance and look at what the stock has done over the years, and you can see. So you can take a look at a chart from 3, 5, 10 years to see it as the stock declined a lot. And is that why the dividend yield is high? Or has the stock been steady or increasing, and has the yield been increasing? It's all information you could easily find. The big point is you don't look at your phone for stocks to pay the highest dividends and say, oh, this pays a 12% dividend. Let's buy it. That company could be about to be bankrupt. You just don't know. You have to do some research.
During economic downturns, what signs should I look for to anticipate potential dividend cuts?
Sure. So that is a big risk in dividend paying stocks, right? So the stock could be going along and say 2008, 2009, when a lot of companies were hit by the recession and the great financial crisis, a lot of companies that paid good dividends all of a sudden weren't earning enough money and didn't have enough capital reserves to pay dividends. And so you need to know how the company is doing and also how the economy is doing. And that's another thing that makes it risky because a lot of people were blindsided by '08 and '09. We can't predict the future. That's one of the downsides of investing in high dividend yield paying stocks.
How can I balance my portfolio to include both dividend paying stocks and those with strong share appreciation potential?
Sure, you buy funds, either index funds or funds that are like index funds that buy most of the market. So you have some shares that, you know, most of your returns from appreciation, some is from dividends. It's a good way to balance things out and diversify, and it's a much better strategy for the long term.
What broader investment strategies should I consider to avoid focusing solely on dividend yields?
Yeah, I think you should buy a globally diversified portfolio. Maybe not invest in every country, like we don't invest in Russia or China or Saudi Arabia or any other autocracies, but other countries where there's a rule of law and democracy and functioning markets make sense to invest through broad-based funds or index funds that are not trying to guess the direction of the stock market, but buying based on the value of the companies and their underlying characteristics.